Tesla delivers record 480K vehicles in Q2. Analysts who focused on the headline number missed how this volume already resets supplier contracts for 2027. Suppliers locked into old volume forecasts now face renegotiation demands inside the next 8 weeks or face allocation cuts. Cell makers either add shifts immediately or lose allocation to newer partners. That same pressure reaches dealers who must absorb higher allocations or risk losing priority in Q4. This forces GM to announce its own accelerated EV ramp by fall just to hold dealer attention. Energy storage hits 13.5 GWh in Q2. Grid operators who skipped storage in their last 2 RFPs now face premium pricing to secure capacity before summer peaks arrive. Factory lines running at this throughput lock in megapack supply through 2027 with zero margin for new orders. This forces Fluence to either license the inverter controls or accept lower win rates on every utility bid. Some regions will see gas peaker retirements accelerate once the new deployments come online next spring. Margin expansion shows up in results by next Q2. Tesla stock drops 8% after Q2 beat. Investors who sold on the headline already priced the delivery beat 3 weeks earlier after export data surfaced. The flat guidance instead signals that production growth slows in the second half, which extends the short interest window by another quarter. This forces analysts covering the name to either downgrade on valuation or defend the multiple with new assumptions on Robotaxi timing. Short sellers who covered early now re-enter positions ahead of the 10Q filing next month. Model Y L6-seater launches in U.S. Family buyers who waited on a 3-row EV now get a $61,990 option that keeps them inside the Tesla ecosystem instead of switching brands. This forces Kia to either cut EV9 lease rates sharply or lose the suburban segment that values range over third-party charging access. Rivian faces similar pressure to advance its 3-row program or see order backlogs shift toward Fremont by early next year. The 6-seat configuration changes how fleet buyers calculate per-seat economics for the first time. 14 Lite rolls out to HW3 cars. HW3 owners running the Lite version will see the performance gap versus newer hardware widen at complex intersections. This pushes some to pursue aftermarket compute upgrades or test Mobileye systems before the next software branch drops. Legacy hardware limitations become more visible exactly when Robotaxi promises require the opposite signal to hold value. Owners who bought FSD expecting parity now question renewal decisions at the end of their current subscription period. Unsupervised Robotaxi launches in Miami. Texas and California regulators have already requested the same safety case files Miami used. Once 2 more states adopt that template, Tesla gains a 12-month head start on any competitor that still needs a safety driver. Ride-hail networks dependent on human fleets will see their cost floor exposed in those markets first. Production Cybercab tests public roads. Austin testing without any manual controls compresses the timeline for federal remote operation standards. NHTSA will likely issue draft rules before year-end to avoid looking behind state-level approvals. That forces every other Robotaxi program to either publish their own no-driver timeline or concede enterprise deals that require proven scale. Optimus production to start very slow. Buyers expecting dozens of units for pilot lines will instead receive 1 robot every 10 days through the end of the year. That pace gives Figure and Boston Dynamics a clear window to close their own automotive contracts before volume pricing from Tesla arrives. European Tesla sales surge in June. Share gains in those 6 countries are coming from the sub-€50,000 segment, not premium. PSA and Renault must now decide whether to accelerate their own discount programs or accept further erosion before the next quarter's registration data lands. Once Q2 earnings call set for July 22nd, investors focused on automotive gross margin will miss the energy storage attachment rate buried in the appendix. If that number clears 35%, cell suppliers face immediate pressure to expand 2027 production lines or use the follow-on contract. Grok 4.5 enters Tesla internal testing. Integration with Tesla's fleet data gives Grok 4.5 something no other large model has: millions of miles of labeled driving edge cases pulled directly from customer cars. That closed loop should cut hallucinated maneuvers in FSD by the end of next year. The bigger shift comes when XAI starts using Tesla's Dojo to retrain on those failures instead of X posts alone. OpenAI and Anthropic will have to license similar vehicle telemetry or fall behind on any autonomy claims. Big Tesla announcement teased for July 7th. July 7 is shaping up as the date Tesla either confirms the unsupervised timeline or resets expectations again. The market has already priced in a 2025 Robotaxi launch. If the announcement focuses on hardware instead, that assumption breaks and short interest climbs fast. Either way, the follow-through determines whether California and Texas approve commercial operations before 2026. Watch the detail on sensor suite changes. Any move away from pure vision would force a full retrain cycle that pushes revenue recognition out another 18 months. Model Y/L offers 325-mile U.S. range. 325 miles puts the refreshed Model Y ahead of every comparable three-row electric SUV on the EPA test. Fleet managers at rental companies now have a clear reason to replace aging gas models with Tesla instead of waiting for Hyundai or Kia updates. The real pressure lands on Ford and GM. Their Mustang Mach-E and Equinox EV lose the one spec advantage they still held in sales pitches. Expect accelerated lease deals from those brands by year-end. Cybercab lacks steering wheel in tests. Production intent units without controls turn every test mile into evidence for an autonomy-only certification. NHTSA has granted no such approval to any operator yet. The second-order effect hits insurance markets first. Carriers need new actuarial tables for vehicles that cannot be driven manually when the system fails. Tesla's timeline now depends on whether regulators accept that data package before Waymo or Zoox submit their own. This also changes how liability gets assigned on every recorded mile. FSD V14 Lite early users share feedback. Highway-focused gains in the Lite build suggest Tesla sequenced the training data to secure the easiest miles first. That approach buys time on the regulatory side, but delays the harder urban certification everyone expected by late 2025. Early users reporting fewer phantom brakes also improves the quality of the next data flywheel. The gap between Lite and full V14 will show how much city performance still lags. Competitors will now have to explain their slower progress on the simpler domains. TSLA reclaims $400 mark pre-deliveries. Institutions front-ran the reclaim by loading long gamma last week. That positioning creates an automatic bid if Q2 deliveries top 460,000 units, as market makers cover delta. Most retail models still assume a guidance cut instead. The August print on early lease returns will show whether price cuts pulled demand forward or if the installed base is actually growing at the rate the stock now prices in. European demand data due next month will either confirm or kill that narrative. Robotaxi expands to Miami geofence. The airport corridor choice is deliberate because it captures high-margin airport runs that Uber currently owns. Once riders experience zero handoff on those trips, switching costs collapse. Waymo must now expand its own Florida footprint before Q4 or watch corporate account share erode. Local regulators track incident rates closely because the first at-fault event sets precedent for the entire Southeast rollout timeline. That data point decides whether Miami becomes the template for 5 more cities next year. Optimus factory scaling underway. Parallel assembly cells already run at 20 units per week. That forces actuator suppliers to lock in volume pricing this quarter or lose the allocation to in-house lines. Figure AI has to either match the production ramp or reposition itself as a software layer on top of third-party hardware. The first customer deployments will reveal whether the B/Z actually hits the $20,000 target that makes warehouse contracts viable. Any slippage kills the ROI case for early adopters this cycle. Software 2026.20.6 begins rollout. Owners running aftermarket wheels will hit new TPMS errors that require dealer-level recalibration. Independent repair shops now face a choice: license the official diagnostics or lose service work on every refreshed model year. The version number signals the UI changes are permanent, so third-party apps must update their integrations before the next branch or break on the fleet. The change also tightens API access for fleet managers, pushing larger operators toward official telematics bundles by year-end. Possible Europe FSD approvals in July. July clearance would give 6 clean months of European miles before the August slowdown hits. Mobileye must accelerate its own EU certification or risk losing the next round of OEM contracts that assumed regulatory parity by fall. The first approved countries will set the data privacy bar that every other jurisdiction then copies. Watch the incident reporting requirements that come attached, because they will dictate sensor placement rules for robotaxi hardware over the next 5 years.